Traders, Nick here, looking at the SMH, basically chip stocks. Okay, and first let's set the scene. Thursday, the 23rd of May, bad day in the market, started in Europe. Regardless of the reason, I'm sure we can find 1,000 headlines that are causing the bleed. This is the S&P as represented by the ETF, the SPY. It's pretty liquid and pretty good representation of what's going on as far as price action. Not good. The good that we just set an all-time high, barely. And so the not good is you get the naysayers that say it's a double top, maybe a triple top. Anyway, technically speaking, forgetting all the headlines, this is a must bounce. And today they bounced magically into the close off the level that absolutely needed to hold. Technically speaking, if this level fails, and you can draw the line wherever you want to, I think technicians will draw it this way. I would say as soon as we lose that low right there, we could see a whoosh down to 273, where the last bounce was, significant bounce. We will have some support around 277, 278, but that would be the technical target of that. Actually, maybe a little bit lower, but I expect buying here. Is this a forecast? No, but it's it's what would happen if we don't get another bounce here soon enough. Now, what happened on Thursday is we left an open gap going into a long weekend. Typically, when we're going into a long weekend, it's a happy weekend, I'd say, okay, we can go up on it. But it's a long weekend going into complete uncertainty from China, and a whole weekend, 4 days, 3 days, for them to tweet their hearts away and send out state media posts in China. So anything can happen. Traders might want to flatten out. So this is a long way of saying whatever I say here as far as buy the dip or whatever in anything I cover in the SMH is under the umbrella of this is not going to happen. Or if it does, it's a limited downside. In other words, because if this opens up, we're going to have a bigger dip than we think. Maybe even come back to 268, which was a big neckline here, with a lot of supports in between. But that's the thing. So, okay, on to the message. SMH. Highly emotional and in the line of fire from China. I don't know enough about China. All I know is they'd be crazy not to do a deal with the U.S. because there's literally double more at stake for them than us, if not more. So they would lose a lot of theft. If they're benefiting from stealing, yes, the trade is X, and we know how much that is they're going to lose. But how much are they going to lose in intangible, which is the smart. Like when you manufacture something, you send it to China, they copy it. Boom. Now it's theirs. They can do whatever they want. They can leverage from that. They can reverse engineer it. They can make it. They can make it cheaper. But if you don't send it to make it there, now they're going to have to scratch their heads and come up with their own ideas. Okay, so this is one way of thinking about it. So taking the emotions out of it, just treat it as a chart. Okay, so let me zoom out to let me see if I can hide everything. Okay, this is a chart. A 1 year daily candle, very common. Every candle is 1 day. They were up here, and sometime last October, we know the whole market fell apart, and then it crashed into the Christmas, right? So nothing unusual. That's how the market worked. These guys moved faster and sometimes earlier. Okay, so the rally off the bottom was fantastic. Right, we know the whole market rallied, but these guys rallied almost 50%, low to high. That's a big rally. They've given up about half of it visually, but it's about a 20% drop from the top. These are round numbers, but I'm looking at it visually. It's about half, right? So on the way up, there were technicals, and let me see if I can do the 5 year. Okay, so this is a weekly chart, meaning every candle is 1 week. There was some sort of a zone that was expanding, and we kept respecting the lower end, and then once we broke out of the upper end, this was the target, maybe a little bit higher, but look at that. I mean, I drew these ahead of time, so it respects the technical aspect of it. This zone, I'm going to expand it right now, was pivotal then. It's going to continue to be important on the way down, because it's not a scientific hard line in the sand. It's just an area where it was resistance. They broke through it. Support, failed, but that was an extreme. Went above it, and now is it going to be support again? Okay, so I still like this chart the way it is on the weekly. Let's go back to the daily. So I'm going to start marking it up. So I'll bring my trusty whiteboard. Thank you, Microsoft. Okay, so this is the rally from here to here. And if I'm looking at it, just about half of it is somewhere around here. It's not a coincidence where we're at. Also, this is not a coincidence. It's a, they tried to hold the line and then they fell apart miserably. Resistance, a couple of times. Finally, boom, break above it, support. So it's support until it's proven otherwise. But if it's proven otherwise, we know where we've gone. So is it going to be as bad as Christmas? I don't think so. This time the Fed is on our side. That's the big difference. So maybe that's worth this much. I think it's worth more. So last year we had China and the Fed. They were both bad. And then he finally said, no, you know what? I was completely confused when I screwed up everything here. That's Fed chair. And now the Fed is on our side. So maybe I take away this and this becomes a support zone. So even if this fails, this is a viable dip somewhere down here. In other words, I think that this will hold. If not, this will hold. So what do I buy? I can buy the SMH itself. It's a fast mover, so you better be ready to withstand some heat. How do I do it? I can buy the SMH itself as a ticker. It's an ETF, so just like the SPY. Or I can buy calls or call spreads. Or I can sell puts spreads. I don't sell naked puts in the SMH. But there are other ways. So we can look at the makeup of it. And let me see here. I'm going to look at, this is the XLK. So the XLK is a technology ETF, but it's got Microsoft, Apple, and that's not the bunch I'm targeting. I'm targeting this guy, for example, Intel. That's one of them. Okay, maybe Oracle is in there. So I'm going to switch it to the SMH. All right. Did I mistype it? Yes. I don't know why Yahoo does that. Anyway. Come on. Oh my gosh. Okay. Holdings. About time. Okay, we're looking at Intel, TSM. So Intel is a big chunk of it, which I don't like. Qualcomm. Headline, you know what happened to Qualcomm. Nvidia is okay. Broadcom, also headline. Applied Materials, I'm short Applied Materials, by the way. I do like Lam. So it's a matter of finding which ways. So the one guy I'm most interested in is not in here. Okay, so who's the leader of the pack? AMD. For some reason, Wall Street loves AMD these days. Last year too, when the market was falling out of bed, this one still managed an up 50% year. So for some reason, even though it's the least cheap, the most expensive from a traditional sense, it's the one that's favored. So it's held up better than a lot of the other ones. So if I compare it to Intel, which I don't like at all, that would be the last one I'd buy in the sector. Maybe I'm wrong about that, but I just don't like it. That's Intel. Okay, so SMH. So AMD seems to have the better bottom. It's holding up better in times of trouble. And if the SMH is rallying, so is AMD. The CEO, Lisa Su, is got a good reputation. So if I wanted to bet up, I'd probably choose AMD. I can buy the calls, I can buy the stock, or I can sell the puts. I prefer selling the puts or put spreads. And for that, it's a different video. But the idea is, if I wanted to buy it at 20, I can sell a leap at 20. And if it crashes, I have the privilege of owning it at 20. And meanwhile, somebody paid me for that. That's the idea of doing the puts. So basically, I'm selling a lottery ticket to somebody else, or I'm selling an insurance policy for somebody else for their AMD stock. So they buy a put to protect it at 20, for example. I'll be glad to take it off their hands and buy it from them at 20. That's given what I know today. So to go along the SMH, I'd probably go along the AMD. Now, summary. SMH has been beaten down. But if I don't know news, if I shut off all the news, this would be a buyable dip. Whether right here because of this level, or just below it because this was an extreme. So maybe I buy half now and half later. I mean, I commit long at half a position now, and if I find out that by Tuesday the markets are a lot lower, then maybe I get to add to it. If the dip is a lot for, in other words, I don't average down too quickly if I am too close together. So the SMH is almost a leading indicator. Everything technology goes through these guys, and they work months ahead of time. Depends on if you're thinking Micron or whatever. They tend to like trade in unison. Micron is a canary in the coal mine. It's cheap. It's probably 3 PE. That's not a pretty chart, but you know, it bounced here in Christmas, so why should it go lower? It can go lower. Cheap can get cheaper. Is this weekly? Yeah, this is weekly. So this was December Christmas, and this was last 2017 August. Complete reset in levels and complete defense here. But if you're a technician and you don't care about value, this is scary if lost, because then it becomes some sort of I call it caterpillar, because it kind of looks like a caterpillar. It's called an inverse cup and handle. It's like a cup and a handle upside down. It grows legs. And if you lose this zone, this is what's going to happen. How deep? Usually about the size of the cup. So mathematically, I just don't see that happening, but it's there. So it's like a 3 PE right now, maybe. I'll go check. And if it goes down to 20, how cheap is it? But I bet you can find premiums down there that you can sell it for income. Only if you're willing and able to own the shares. It's dangerous to sell puts naked unless you want to own the shares. So this is a stock that is now it turned into a Micron video, but it's not. The Micron just happens to be the message here that there is a bottom to this descent, unless the stock market itself is going to correct hard, and it could. I mean, we are at a must-hold level. I showed you that. DIA will probably show it differently. So this is the Dow. Mind you, this includes Boeing's mess and Apple's recent debacle. They're two huge price-weighted. It's price-weighted, so the bigger the ticker price, the bigger the impact. So Goldman Sachs is in there. And Boeing, obviously, and Apple, obviously, Chevron and Exxon are big components. So energy, oil is down big. So, boy, this video is turning out to be a whole look up on the whole economy. So this is the small caps, and they too are fighting for a level that they need to hold. However, the small caps did not recover the highs and set new highs, and so they might hold the bottom a little bit better. We shall see. For some reason, I highlighted this as important. I'm going to extend it out. Okay, Nick signing out. Let me know if you have any questions.